And I mean, I have this, I don't know if I'm becoming famous for this theory, this strategy, but I call it the mushroom strategy. There's obviously going the route of like you looking at the data and then really spending time on educating yourself. But I think a lot of people, they don't want to, or they don't have the skills to be able to digest all that data. And that's why and that includes myself. I have the educational background. I'm an economist by education, but I just don't feel like I have the time to crunch through all that data, and then it changes so fast in general. So I use what I call the mushroom strategy, which is basically you have a certain portfolio of cryptocurrencies, you put it into something like Celsius, earning yield, and every time something pops up in price, that's where the mushroom come pops up in your farm. Then you take off your yield. So basically, let's say you earned over the course of 2 months, you've earned whatever 2% in yield or 1% or whatever. But because the price spikes so much, it's actually a substantial amount of money, depending on how much you deposit, of course. So you take out that profit, turn it into stable coins, or maybe something, another cryptocurrency that has been underperforming that you still believe in. And in that way, you sort of build up your portfolio slowly but surely, cutting down those mushrooms every time they pop up. And a day like this, for example, today when the crypto has been going up a lot, I've been taking profit on I think three different coins today, and converting it into stable coins. And then what I hope for is that the market drops a little bit tomorrow or in 2 days or whatever, and then I will buy up something else. The risk of that strategy is obviously that the market will continue going up, and then I sold. I took profit too early, basically. So that's the risk that I'm willing to take. That's okay with me because I didn't sell any of my principal. I only took, that's the important point, right? I only took the profit that I made using something like Celsius.
Yeah, actually, I really like that. For a lot of reasons, I really like that. It's a discipline. It's anytime you have like a strategy, you stick with it, then
Mm,
you have something that, yeah, to me, it's a feedback loop. So you can say, okay, how is this performing? And I think something like that, like you're really reducing your downside risk in a lot of ways, and
mm,
you're basically forcing yourself to be disciplined. And I think that's a really good
exactly.
approach, and you're not taking like crazy amounts of profits, but you're taking some, and by
Exactly.
doing that, you're positioning yourself where most people, if they don't take any profits and they're just waiting, the entire cycle, um, they have to hodl because they have
Yeah.
to go through these ups and downs. Whereas if you're doing your strategy and that kind of an approach, you almost don't care where the market goes in the short term.
Exactly.
Because if it goes down a bit, you take advantage of that. If it keeps going up, okay, well, I didn't get max maybe upside, but I
Mm.
also locked in profits. And emotionally, I mean, I'm sure I don't know your situation, but I'm assuming that you're probably less stressed than most of the market. So
Right.
I think it's a great strategy. I think it makes a lot of sense, and I think it's and that's the thing too, right? With the way the price moves, there's such volatility, and there's such fast movements to the upside that, like you said, that interest, even though it might be over a few months span, like a percent or two, it can be a lot more than that, right? Like if you have a,
Mm.
a doubling or tripling of whatever asset you're in, I
For
mean,
sure.
that becomes easily, that can become 6% over a few months, or whatever,
Mm.
4, 6%. So yeah, and you take a good percentage of profits, you're ready for any downside, and then you also still have the vast majority in for the upside. So I think it's great, a great way to do things for sure.
That's why I like to advocate for it and share it with people, because the mental stress of using the so-called quote unquote mushroom strategy that I just outlined, it gives you calm when the market tanks, because at least you took profit when before the market tanked, and you feel like, yeah, my principal and my portfolio is down a lot, but at least I took some profit, so I'm not completely stupid or whatever you might think of yourself when that happens. And if the market continues to go up, then I'm like, yeah, okay, I took profit too early, but still my principal is worth way more, so I'm still winning. So I think, yeah, both the mental stress and of course the economic benefit is pretty good. It's been treating me well, at least
Yeah,
over yeah.
I think it's good for whoever, like whatever type of investor, just to have some sort of methodology or something they're following to
Mm.
Yeah, just have a strategy. I think regardless of what your strategy is, like, have something, I would say, or and have a plan, like at least a plan, a strategy and a plan. Otherwise, just winging things, it tends to be harder. Um, make more mistakes potentially, right?
Exactly.
Everyone can always get lucky, but like on average, like probability
Yeah.
wise, like you're most likely, yeah, not going to
Stick
fare
to
as
plan.
well.
Yeah.
Stick to a plan, right? Plan A,
Stick to plan.
plan B. Stick to have your make up your own plan, right? So,
Rule
I
number
would
one, stick to plan always.
stick to a plan, right? Again, and so one question about your strategy there. Do you have a threshold for what percentage of a increase in
Mm,
the price before you do
mm.
take those profits, or how do you do?
Yeah.
Do you just do it based on a monthly basis, like no matter what the
Yeah.
like how do you structure it?
Yeah, so that's $1 million question, and I've actually been back and forth between a lot of things on that part, when to cash out or take profit. So I use different. I use, for example, TradingView, which many people might know, where I have all the cryptocurrencies that I follow. And in that, you can set different indicators. There's something called RSI, which indicates whether a particular asset is overbought or oversold. There's boiling up bands. There's different indicators that tells you whether the market is overheated or the opposite, of course. And I just set these different bands, especially, and when a certain asset or crypto is trading way beyond a moving average, or exponential moving average to be correct, then I cash out or take some profit there when it's being overbought, basically. So yeah, that's my way of doing it. So I just look every morning. I just see, just because I'm curious, also what's happening in blockchain and crypto in general. So I can't stop, and it's quite easy to see. Okay, there's a crypto, there's a coin that has been increasing like 20% today. It's probably a good place to start, whether it's being overbought. And then I can see, okay, it's over the trend line, long-term trend line. I'll go in and take profit. So that's the easy way, I think, of doing it once you know how to set up on TradingView.
Yeah, that makes a lot of sense. So you're using like, yeah, using like the kind of traditional TA indicators,
Exactly.
as a way of kind of increasing the probability of your kind of like knowing, okay, this is an oversold point potentially, and then that gives you kind of like a way of determining when to do your strategy. So yeah, I think that's you're combining kind of two things, but that's
Yeah.
overall that makes sense for sure.
A, a similar way
100%.
of doing it would just be, I have a target for, if I bought Bitcoin, I bought it, let's say, at 30K, and my target is to make 10% profit. So that will be 33K. And whenever the price hits 33K, then I take out profit. That could be a simple strategy also if you don't want to get into trading view and all these different indicators, for sure.